Hey everyone, just want to check. Anyway, thanks Sam for the great introduction. Just want to share that I've been part of ASN for quite some time, and I just want to say that the quality of people is quite phenomenal. So I think today I just want to do a presentation just to give back to this community as well. But just want to check, can all of you see my screen?
Yes.
All right, great. Okay, so I'm just gonna do it full screen. Okay. So today, I'm going to share with you about this title called Exceptionalism in Management Teams. I think in a lot of times when you look at a lot of brokerage reports out there, a lot of professional, maybe fund managers, they look at business models, they look at valuations, they look at competitors, and all these are important. But very often, I feel that one of the aspects of investing that has not been spoken too much is really about the management team and how do we assess management team, because the way I look at it is that, today every business that's being started is started by people, right? And a company is nothing but the people together, right? Because if you remove the people element, then it's just a corporate structure. So I feel that, it's really important that we are able to distill some learning lessons and how do we evaluate management teams. So before I start, I just want to share that, so like what Sam have mentioned, I'm a full-time investor. So initially, I had a lot of um, problems when it comes to investing. I was just banging my head around trying to figure out what was the strategy that could really work for me. But thankfully, I think with a lot of mentors and a lot of spending a lot of time reading investment books and networking, finally, I guess 5 years ago, I started to really formulate my own strategy, and it worked since then. But I guess investing is not like you roll a dice and you count your luck and see whether you make money, but it really involves a lot of hard work, and sometimes you may even spend hours to the midnight researching companies. So I guess being part of AHN is a great plus, and I think I enjoy being part of this community. So I think this year, so a bit of me is as well. I'm a super foodie, so I've been gaining quite a bit of weight during COVID-19. I love traveling. This year in March, I started traveling to USA. So hopefully, next year if I could meet some of you or meet Sam, meet Kenneth, that would be really amazing. So these are the photos that I took earlier this year. Was really visiting companies like PAR Technology, Himacare, Galaxy Gaming. I enjoy meeting management teams, understanding the why are they driven, why do we want to start a company, where do they envision themselves. So I guess sometimes it's very different when you just read interviews and versus you in person talking to them and understanding their purpose, right? So I also invest in companies in Australia, in Hong Kong, and also there's this company called C Group that's listed in US, but it's a Singapore listed company. So for me, one of the core strategy of my investment is really about understanding the people. I think the people element is really underrated, and I feel that by spending time understanding people, that really allowed me to have a different edge in the investing world. So these some photos that I took in US. I think US is a beautiful country. I definitely hope to come back again next year. Okay, so this is Hong Kong. Yeah, so when I was pretty young, I think I always enjoyed giving back more of my knowledge, because I feel that I'm just a vessel that I've learned knowledge from others, and I think it's a duty to pass it on to other people as well. Okay, so let's move on to the content of today, right? As we look at the world today, I think there are different kind of leaders. You have those charismatic ones, which are Barack Obama. You have the dominant ones like Lee Kuan Yew of Singapore. You also have the gentle ones like Mother Teresa. And in a very similar manner, I feel that, while we sort of evaluate leaders of the world, whether they are political leaders, whether they are leaders by influence, right? So in the same way, I think we should also evaluate the management teams that we are actually entrusting our money to actually grow the company, right? So if you look at the names, if you guys could type it in the comment section, who do you know of anyone? Is any of them familiar to you? Just type out their names in the chat box, all right? Okay. So I'm just gonna look at the comments to take a look. All right, so I see Steve Jobs, yes. How about the rest? Elon Musk, Mark Zuckerberg, Forrest Lee, Yeah, that's wonderful, right? So these are uh, you know, different teams, different management teams, and you see, people management teams can come from different forms, right? You have those that are dominant ones, you have those that are soft kind. So I think it's really important that we are able to make a differentiation point. Okay, so to me, I feel that, okay, how do I tell whether the management teams are going to be excellent management teams going forward? I think it's really hard to tell, which is why I decided to take a different approach to that. You know, like Steve Jobs said, right? You can't connect the dots looking forward, but you can connect the dots looking backwards. And so you have to trust the dots will somehow connect in your future. So in this presentation, I'll be sharing with you some of the management teams that have excelled, right? What are the qualities they have? What are the characteristics that they have? So that when it comes to your own portfolio, you can start asking questions whether the management team that you have in your company exhibit such characteristics, all right? So if you guys have feedback, you know, on this presentation slide, do feel free to email me at calvesi@gmail.com. I'm open to feedback, and I always think that all of us working together, that'll be much better. All right. So the first thing that I want to talk about is that a management team has to be opportunistic. So how do I define this, right? I guess really when you see that there's a market gap in the business, in the world, you know, the management team is able to rally its people very quickly towards filling up the market gap quickly, right? Or when there's a clear opportunity to dominate a certain category, the management team is relentless. So what I mean by that, right? Because if you look at this COVID-19, there are some management teams that look at the business climate and say, okay, there's a lot of dangers out there, right? And they kind of shy away from making bold investments. But whereas you look at certain companies, which I'll show you later, when they look at pandemic, they see that it's actually an excellent opportunity to invest more, to spend more time connecting with their customers, so that post-pandemic, they will emerge as a stronger player. So to the point three, right? When others referring to other companies pull back and shy away during times of uncertainty, the management is able to invest boldly with a clear objective in mind. So I think that when it comes to management team, you know, when there's clear opportunity, they must be relentless. They must pursue it with all their energy and efforts, right? So one of the example that I want to share with you today is Matthew Prince of Cloudflare. So Cloudflare does content delivery network. They are a company that ensure that your videos, your websites loads up as fast as possible, and also prevent your website from being hacked as well. So he said this thing, right? Great companies use crises to focus on what's important, and I think also to invest in the future while others pull back. So you see, during this pandemic, a lot of people are relying on internet services, and I think that's really important. So what they did was this, right? They actually gave free services to millions of SMEs, right? Because SMEs do not have the ability to pay right now, but they say, hey, you know, we could give this service to people for free, and at the end of the day, it does not cost us a lot of money to deliver that service. But how about the post-pandemic world, right? How many of them, after seeing the benefits of our products, would actually decide to subscribe to our product, right? You know, you have the free tier, you have the high tier. So in a way, when everyone is stuck at home, you know, the CEOs will always envision and think about how can they utilize their products and services to reach out to the most customers as possible, right, during this pandemic. And maybe another relevant example that I can share with you is Forrest Lee of C Group. So C Group owns Shopee, which is the #1 Asia's e-commerce player. And they also owned Garena, which owns the game called Free Fire, which has been ranked, I think, top 10 globally in terms of mobile playing games. So Forrest Lee has been working 7 days, weeks in his office since April. And this year is the most pivotal year for him. So you see, like when during pandemic, everyone is stuck at home, people will be utilizing e-commerce, people will be playing games, right? And when it comes to acquiring customer, when everyone's at home and you're marketing heavily to them, your cost of acquisition will be tremendously low, right? It's only at this point of time during pandemic where your acquisition cost is very, very low as compared to the normal times. Why? Because everyone is staying at home, they're consuming e-commerce, they're likely to use e-commerce, and to some people who say that, you know, e-commerce may be irreversible. That means new habits will be formed. So seeing that opportunity, right? He wants to crystallize the opportunity for the business. And this is the reason why, you know, he has been working really hard and empowering his team and hiring more people to really fulfill the demand. Because I think previously my chief investment officer actually told me something. During the sunny days, you know, market shares do not get shifted very, very easily. But during the rainy days where things get shaky, where companies with weak balance sheets suffer, this is where a strong player could go in and fill up the gap that's being left behind by other players. So today, actually, a lot of e-commerce players don't have the enough financial backing, and they started to shy away. And Forrest Lee saw the opportunity, and he quickly went to fill up the gap, right? He hired more people and went to fill up the gap. And he said that, you know, at the end of the day, you know, if there's a market opportunity that's right in front of your eyes, you know, you shouldn't be just sitting down and doing nothing. You should do your best as much as possible to capture all the market share that you can ever have, right? So this is something that I believe is one of the characteristics that I really, really want for all the management teams that I have, right? I mean, like when you see an opportunity out there, you don't just sit down and do nothing, but you have to do something about it to you know, to capture the outsized opportunity. Okay, so that's first characteristics that I'm looking for in the business that I invest. So one thing I want to say here, just copying this quote by Andy, bad companies are destroyed by crises, good companies survive by them, and great companies are improved by them, right? So when I look at management team, I don't want to hear like, okay, talk about how pandemic is bringing them problems, right? If that's the case, then meaning maybe the business model is not robust, maybe the business model is unable to overcome the pandemic. But what I want to hear actually is that how pandemic actually opened up unique opportunities for them to actually grow much faster, outpace the average market growth. So that's the thing that I think is really important. Okay, and let's move on to the next characteristic, right? I'm actually looking for management teams that are experimental. Okay, hold on. Okay, I'm actually looking for management teams that are experimental. All right, so just want to talk to you guys about what it means, right? First is that they are willing to invest research and development money into products that may not have immediate returns on investments. So what I mean by that, right? There are some products when the management is trying to plan for it. Let's say in the earlier days, you know, Gmail wasn't making money. But when Gmail wasn't making money, does it mean that it's not a good product? Right? Does it mean that it should not deserve a project team? Does it mean that it doesn't deserve R&D money? The answer is no, right? Because eventually, as Gmail scale up, you could serve ads, and that could be a revenue generator as well. So a lot of CEOs, I realize that are truly amazing CEOs, they're actually willing to double down on projects, even loss-making ones, that are gaining traction, and even throw their personal support behind a team's members project, right? And they are willing to avoid what the industry usually thinks, and they are usually very independent thinkers. So what I mean by that, you know, so I think most of us use Shopify. So this guy, Daniel, he's actually the founder. And he said that in his company, there's only one thing that they wanted to do really, really well, which is creating a culture of experimentation and willing to double down on opportunities, right? So how do you build stickiness? How do you ensure that Spotify is always the place that people would love to go, right? Is it tinkering with the playlist? Is it doing song recommendations? Is it giving a better user experience? I think all these are really important, but also ensuring that the listening time among the users actually increase. Because when you spend more time on a platform like Spotify, it shows that you love the product. It shows that it builds great customer engagement as well. So do you know that Spotify actually has several teams that does a lot of A/B testing? That means doing different experiments to see how users react to it. So while they were doing a lot of it, some of them did not produce any results. But actually, if one of the experiments just produce one result, you know, it could be really, really amazing. So maybe just to give you another analogy, it's like venture capitalists, right? You can invest in 10 companies. Maybe out of 8, you are losing a lot of money. Maybe you totally lost your investment, right? But if one of them did well, it could just offset all the losses and yet bring you to a positive position, right? So he said that, you know, it is really the 1,000 little things that we are doing which will gradually add up over time. So this is just one example, but I think another example that could be really relevant to all of us is maybe Google, right? In the past, I'm not sure about now, but in the past, Google employees actually have 20% of their working time to work on their personal project, right? And that is how one of the team members actually created Gmail. And that's how one of the team members create AdSense and also Google News, right? So you see, I think Thomson Edison was saying that, you know, when he was trying to invent the light bulb, right, he failed many times, but he didn't look at it as failures, but he looked at it as ways that didn't work, right? So that he could really focus on ways that could work eventually. So at the end of the day, I think what I'm saying here is that a CEO should never be satisfied with the products that they have right now, but they should always innovate, they should always experiment, such that they can always grab the future, right? There's a book that I really like, it's called The Innovator's Dilemma, right? You can have a business right now that's making a lot of money, but if it is going to be disrupted, right, then what's good that there is, right? That there isn't any good. So a business must always innovate. And how do you innovate? You cannot innovate without being experimental. You got to try, even though it doesn't work, but you're going to try. And if one thing works, you're definitely going to have a better business overall, right? So there are many projects, some may not do well, but those that succeed, right, will become attractive businesses. And also Jeff Bezos, right? We all know that the Fire phone in US is a failure. I mean, Jeff Bezos admitted himself. But that doesn't stop him from investing, because if you look at Kindle, right? Kindle was an experiment as well, but it became so good. And, you know, I have a Kindle as well, but I've not been using it, right? You look at Amazon Web Services, right? Amazon AWS. Did you know that it was an experiment as well? But if Jeff Bezos did not invest boldly in the future, then where do, you know, there wouldn't be any Kindle, there wouldn't be any Amazon AWS, right? So he said this very clearly, right? I made billions of dollars of failures at Amazon, but the same thing here is this, right? But a few big successes compensate for dozens and dozens of things that didn't work, right? So I don't like CEOs that play it really safe, because when you play it really safe, you may not secure the future, because you must know that business is always dynamic. Doesn't mean you're good today, you'll be good 5 years later. It doesn't mean you're good like 10 years later, right? Today in China, I think Tencent is always seen as the top player. But of course, there's ByteDance that owns TikTok that is actually rising really quickly. So I really want to see from interviews, from earnings transcript, that how do the management think about the future, right? And I think that this kind of tells us whether they are just sitting on the laurels, or are they always constantly thinking about innovating for the future, okay? So there's no such thing as a failed experiment, only experiments with unexpected outcomes. I truly believe in that, okay? And the next thing I want to share, which is a bit tough, right? Because is this thing called a realist optimist, right? Because if you look at a caterpillar, how they became a butterfly, you know, if it's just, you know, if the caterpillar is just happy staying inside and not wanting to get out, the caterpillar wouldn't be a butterfly eventually. So there's some pain in growing companies that are loss-making, you know. So what I want to share with you is this. I realized that businesses that are willing to practice delayed gratification by prioritizing growth over immediate profits, they really build long-term sustainable market dominance, right? And this only happens when the management is able to endure and support any current loss-making business units and focus on the future profits. So it may sound a bit a lot of words, but I'll demonstrate using a few examples later on. So they really kind of look at the long game instead of feeling the need to satisfy Wall Street and analyst need for constant growth. So maybe I'll give you an example here today, right? Today, when you spend R&D money to actually develop new products, right? The R&D money may not produce products immediately, right? But when you increase your R&D spend, what happens to your profit? Will your profit increase or drop? Can anyone just type in the comment section? Yeah, Michael says being complacent kills great companies, right? Yeah. So Will said that, you know, if you spend more R&D, your profit will drop in the short term. But that is not what most management team is comfortable about, because management teams wants to report great profits. So their behavior is this, right? How can I increase my profits? That's always the main objective that they do. But what they did not realize is that if you cut back, if you increase your R&D, it may not give you immediate profits right now, but in the future, it will guarantee you the future, right? So I don't want management team to say, okay, how do I optimize the earnings right now? You could be optimizing the earnings right now, but you're actually missing the whole picture, because in the future, you're going to lose out in terms of product completeness, in terms of user experience, right? What I do remember is that Heinz, this ketchup company, they actually cut a lot of R&D stuff in the future, and the product innovation just died, and eventually they lost a lot of market share. Okay, so that's one thing I want to share. So today I just want to share a Singapore company. It's called iFast. It's quite similar to Charles Schwab. Are you guys familiar with Charles Schwab? I think recently they merged with TD Ameritrade. Okay, so Charles Schwab is a wealth platform management company, very similar to Charles Schwab, where you can buy stocks, you can buy bonds, you can buy ETFs, and I think you can buy some corporate bonds as well, right? So they have been in several countries: Singapore, Hong Kong, Malaysia, China. Singapore was always the beginning country that which they are in. Subsequently, they went to Hong Kong and Malaysia. But when they first entered the Hong Kong and Malaysia, they were loss-making, right? And eventually, as it gained scale, it became profitable, right? But here's the problem, right? Because they also wanted to go China. And China itself is really competitive with Alibaba wealth management products, with Tencent with their wealth management products as well. And for the longest time, China has been loss-making, and it has been dragging the overall profits of the group, right? You can see in 2016, they lost like 3.6 million. 2019, they lost even more money. They lost about 5 million. And in first half this year, they lost about 2.3 million, right? So it's like, imagine you're earning like $10 million, but because of your China segment that's losing money, almost 5 million, the group actually reported 5 million profits. So it's like 10 minus 5, right? So you left with 5. So investors are saying, hey, Mr. Lim, why don't you just cut away this China segment? It's useless, right? It's not making money. In fact, it's dragging the overall profits. But Mr. Lim has this vision that, it will cost us far more not to be part of China's growth, because China, rising population, rising wealth, and there's a lot of money that can be earned in China, right? And he says that it is really important for iFast to be there. We may not make money right now, but we are certainly getting there, right? And I see that the losses start to narrow again, right? So this is why he said in a recent earnings call, right? He said that iFast will not give up our investment in China if it is clear that its effort is not producing results, and it will not be producing results in the future, and that iFast neither knows the reason nor have the solution to tackle the issue. When iFast does not know how to turn around its China business, that will be the point to give up its investment in China. However, iFast does not believe it is that situation at the current juncture, right? So it is often so difficult to communicate your vision, your investment plans to the shareholders, right? But I feel that a CEO must be willing to take that stand, must be willing to make that that unpopular decision, right? So that the business could grow in the future, okay? So this is just one example. I would like to share with you another example here. All of us might be familiar with the idea of Costco, right? Okay, Will says that Lim looks like Jay Chou. Okay, let me look at the photo again. Oh yeah, that's quite a bit of resemblance over there. Okay, so so JD is like the Costco model, right? So Costco, what's good about Costco, guys? Could you just share with us in a chat box, okay? So from my perspective, right, the reason why Costco is unique, the reason why Costco is interesting, is that every single time they purchase products from the suppliers, right, they purchase it at a very, very low price, and I believe they only mark up the products by 5%, right? They only mark up the products by 5%, and they'll sell it to the users, right? So maybe previously they were buying like 100 million of products from supplier A. Then maybe 3 years later, right, instead of buying 100 million of units, they decide to increase to buy 300 million of units from the supplier. And how likely do you think that Costco has a bargaining power to maybe persuade the suppliers to sell them cheaper per unit? Is it high or low? Yeah, definitely high, right? So let's say, for example, the supplier is kind of like selling me maybe a toothbrush for $1, and I purchased 100 million units, but now I'm buying like 300 million units. I'll tell the supplier, hey, you know, instead of selling me a $1, can you sell me at 90 cents? The suppliers would definitely be happy because now you're not doing 100 million of units, you're doing like 300 million of units. So with that, guess what? You know, Costco could actually pocket the difference. But do you know that Costco did not pocket the difference, but they passed out the cost savings to the customers, right? So that's a great thing. That's a great thing about Costco, which is why people love Costco, right? Costco, I guess, is also famous for their pizzas, their hot dogs. I haven't tried, but I think I definitely want to do that one day. So you can see that with lower price, the consumers, when the consumers get lower prices, what do? They feel like they have gotten value. When they have gotten value, they would definitely want to buy more, right? When they want to buy more from Costco, it means that Costco is going to go back to the suppliers and demand for a lower price. So can you see that this is like a flywheel effect, that a lower price, lower cost structure, good customer experience, and you have more buyers, right? So over time, you actually get lower and lower. Your prices get lower and lower, right? So consumers like us do get a great deal, a great value from there. And you see, when Costco is able to buy the products at such a low price, can anyone do that too? My answer to that is no, because Costco brings volume, brings scale to the suppliers, to the manufacturers, which is why suppliers and manufacturers are able to give them a low price. So if anyone else, let's say like Walmart or whoever comes in and asks, hey, you know, I saw that you sold this toothbrush to Costco at 90 cents. Can I buy it at 90 cents too? What do you think the suppliers would say? Yes or no? I guess we'll probably say no, right? Because the volume is not comparable, right? So with that understanding of the Costco model, I want to apply the framework onto JD.com. Okay, it's a e-commerce company in China. So what can you see from here? There's one thing I want to share with you is that the gross profit margin, you can see in 2015 it was about 12.2, and you have steadily rose all the way to about 14.7%. When I look at this, right, I feel like JD could have increased the prices of their products, but they refused to do that because they wanted to give the value to the customers, which is why if you look at the gross profit margin, it hasn't increased dramatically at all, right? So JD today, I mean, they are really focusing a lot on getting scale, getting volume, very similar like the Costco model, but they're applying it in the China's landscape, right? So ultimately, when you're providing such a low price product to your customer because of the volume you have, my question is this: how can anyone else compete with you anymore? Because they cannot compete with you on the price level, right? But today, if JD.com, all that they think about is monetizing the customers very quickly, right? Instead of passing down the cost savings to these customers, they decide to pocket the difference, pocket the savings, and they report very quick gross profit margins increment. Well, what's going to happen to them is that they're going to lose the market dominance, right? They're going to lose the business to other players that are willing to compete with them as aggressive, right? So which is why Jeff Bezos actually once said, your margin is my opportunity, right? So the better way to think about businesses like JD, we cannot use the traditional way of thinking, right? We cannot say, okay, we want to look for companies with high margins, high growth, you know, that is something that's all right. But I think we need to apply a different lens when we're looking at JD.com. We would like them to actually keep their margins as low as possible. And once they become the dominant player, whereby they kind of blanket the whole China, they could actually raise the margins then because the customers are loyal to them, the customers enjoy the product. So it's about at which stage do you start to monetize, right? You don't want to monetize too early and you irritate your customers and your customers run away to other people. You want to gain the dominance, gain the trust, and before you start kind of monetizing your customers, all right? So you can see as well the operating margins of the business, right, was 0.2% in 2015, and now it's about 3%. It is a huge increment, right? So that is something that's really important. And I think today, as you look at businesses like CrowdStrike, like Snowflake, um, like JD, like C, all of that, or Square, right? They're all doing that. They are kind of like really after building that ecosystem, a very loyal base of customers, then they decide to monetize them later on. And that's how you dominate, and that's how you always remain relevant. So here's the thing, guys. When they were making a lot of money, all right, when they were making a lot of money from the retail business, they did not just take the money and just keep it in a company, right? They actually invested in AI, big data, cloud, and also fresh groceries. And you see, as they are gaining more profitability in various parts of their business, they believe that the profits will continue to grow for a long time. So all the profits that they make, you know, they actually reinvested it to JD Logistics, JD Health, JD Cloud, right? And because these businesses are in the early stage of the business, you know, like JD Logistics, JD Cloud actually put, like they kind of like put down the overall profit of the company. But Richard Liu, right, he believes that that's the right move to make, right? Whatever money I have, I should reinvest into new businesses, even they are loss making, even if they might reduce the business profits of the overall group, I should do it, because that's how we secure the future, right? And because of that foresight, that reinvestment, can you see that JD Health today is going to do another IPO, $1 billion, right? JD FinTech, I think JD Finance is going for IPO as well. And also, they have this business called procurement, enterprise procurement. Now it's ranked number one in China with a market share of 52%. If Richard Liu were just happy making profits from one segment and did not want to invest, right, would he enjoy, would he have several businesses today? The answer is clearly no, right? So when you invest, when you grow a business, you may never know where it will become. But if you choose to sit still and do nothing, then the future is not going to be yours, right? But if you must be willing to reinvest in your business, so that's going to be what is going to be important to secure your future, right? So this is really, really important that I want to share with you guys, this one, right? Yep. So let's move on, right? I'm going to run it very quickly, but I'm just looking at the chat. If you guys feel that I'm moving too fast, please do stop me as well, okay? So, you know, this is like Jesus, right? On the cross, sacrificing for people, right, in the Christian religion. So this thing here is called self-sacrifice. I mean, like they sacrifice themselves. So what I mean by that, okay? There are some people like, I'm going to share you some examples later on, right? They sacrifice personal reputation and take on extraordinary personal risks to achieve certain strategic outcomes, such as keeping the company afloat, transforming the company, hiring key talents, and others, right? I'm going to share with you a few examples here. So there's this guy called Ryan, who's the CEO of Expel. You know, I think it's one of the best performing companies in the last 5 years. Back then, the business was in big trouble, really big trouble. And Ryan actually offered to pay the company's debt using his personal credit card limit that he rarely used, right? And which had a 25,000 limit, right? He said that I knew that at the point I would eventually get paid back by the company, right? I knew that we could do it. So if you look at a business like that, you know, you have a CEO that's willing to put its own money and skin in the game in the business, right? What does it tell you, right? It tells you that it's all in, right? It's like playing poker, right? How often do you go all in? You only go all in when you feel like you are really confident about the outcomes, right? So you know, you really want a management team to have really great focus in the business. Maybe I'll show you another one. Sanit Singh, right? So he's actually located in New York. He had a lot of great opportunities, but because he saw this company called Par Technology and he became a CEO, and because of that, he actually allocated his whole family to New Hartford, which is a place that is not really not like city like, it's quite in the outskirts, right? Which is really far from New York. And given his background and achievement, he could have earned higher salary than his current pay. But he chose to give up that life in New York so that he could be fully devoted into Par Technology. And ever since he came on the business, right, the business has been compounding because he did a lot of right decisions to help the business grow in many ways. And also, right, when he first joined the board, he told the board, hey, don't pay me salary, pay me stock options, right? So what does it signify? It really signifies something really special over here. Is that, hey, I only want to be paid if the business does well, right? If the share price does well. If it doesn't do well, then don't pay me, right? And you find that kind of alignment to be really, really rare, right? I would say so, right? So to Michael's point, I think, yeah, it doesn't mean that we should go out of our way to sacrifice our whole life. I think founders, they should have their own life as well. Yeah, but having incentive alignment is really important. Thanks, Michael. All right, so visionary, I think, that there's often times whereby in Singapore, I would attend some annual general meetings and I'll speak to certain CEOs and, ask them, hey, where do you see yourself in 5 years or 10 years? And they will just reply me, hey, I'm just happy where we are and let's see how the business goes, right? When I heard that, I was really disappointed because I always hope that the management teams, the companies that I invest in, their management teams, at least have a vision of the business, right? Where it should go in the next 3 to 5 years, right? I think that's really important, okay? So I think really, so this is my definition. I just type it out my own based on my understanding. But if you guys have a different understanding, do share as well. I think that would be really good. I think being a visionary means the ability to visualize and see what the future needs and make certain conviction bets by piecing information and intuition. I think there's this Canadian hockey player who said that, hey, skate to where the puck is going, not where it has been, right? So if you're going to invest or create products that the world needs today, then you are not going to you're not good at all, right? What you should do is that a management team should invest or create products that the future needs. Okay, that's really important, right? You really want to create products where the future needs. Okay. You can see Steve Jobs when he created iPhone. I think that changed the game. And when he created the business, I guess a lot of people actually made fun of him. Even CEO of Microsoft, Steve Ballmer, former Nokia CEO, kind of like said that, hey, this product sucks. Who would want a phone without a keypad, right? But I think Steve Jobs actually believed in it, and he actually created that product. You look at Mark Zuckerberg when he bought Instagram. I believe that Instagram only had like 16 employees, but he saw that he said this, right? Even CNN said that he was paying a steep price for a startup, but Mark Zuckerberg believed that it would be more costly not to acquire them. And today you look at Instagram, the kind of revenues they are bringing in, right? I think Facebook made more than 100 times its initial investment in Instagram. And also after IPO, Mark Zuckerberg saw the future. He saw that the future was a mobile first strategy, right? It's no longer personal PCs. I think that era is gone. Now it's about the mobile first strategy, the iPads, the iPhones. That's how we consume information. And that's where they created the app. And the app was so good that allowed them to actually secure the future. And guys, when you look at this, I can tell you it's not easy, because when Mark Zuckerberg proposed to buy Instagram for $1 billion, everyone actually said no. But he pushed ahead with it because he believed that that is what Facebook needs to become a stronger company. So I often like companies that take bold bets into the future, right? And of course, Elon Musk investing so much money in Tesla. By the way, Tesla is not founded by him, but he took over the business, SpaceX as well, right? So the question is this, right? Do you guys think that it is very dangerous, very risky investing in CEOs that are taking big bets in their companies? Just type a yes or no. I just want to get a sense of opinions over there. Patrick said yes. Okay. Do y'all think it's risky to invest in management teams that are taking very, very bold bets that could really either make or break the company? Okay, I'll share my perspective. My perspective is that it is very, very risky. All right, it is very, very risky. But here's what I think as well. I think that when the management team or the management makes their first bold bet, and if the outcome is good, you know, it really tells me that this guy kind of knows certain things. And even after he had made that bull bet, I can actually come in as an investor. So I may not need to come in before, right? Because when I come in before, it's very risky. I can come in after, right? I can invest after Mark Zuckerberg bought Instagram and Instagram is successful. Because why? That person is the same person, right? With that intuition, with that visionary, right? Today, Mark Zuckerberg is creating the Ready Player One version, the world that we know of, like the AR, VR. So could that be successful as well? I think yes. So we can definitely lower down our risk by buying into the companies after the management team have made a big bet and it have turned out successful. Because what is the likelihood that he will be successful again and again? I think it shows that it will be much higher and the risk will be much lower, right? Even when Amazon created AWS, after that, it's a big bet that actually paid off. But who knows what Jeff Bezos may create in the future, right? So that's the thing that I want to share. But again, I think there's no right or wrong. It's just my perception of how, or maybe how I would like to kind of strategize my portfolio around it, right? Okay, of course, also very important, being a competent capital allocator. When you have a lot of money that's gushing into the business, what do you do with it? Do you just buy back your shares? Do you, pay your debt? Do you give dividends? Do you keep your money? I think Facebook is known to not give out any dividends. They have not given out any dividends before, right? And let's say if you were to choose to allocate your money within the company, which projects do you want to allocate? How do you want to allocate, right? Those are very important questions that we have to ask ourselves, right? So I guess, a management can really decide to reinvest in the business, pay down their debt, pay out dividends, buy back shares, acquire another company. What's the process, right? How do you think about it? Like, hey, if I would like to buy this company, what is the minimum returns that I want to get, right? Do I want to get a 10% returns if I can buy this company? And do you know that there are some business leaders, when they buy a company, they just buy it for ego reasons, right? I mean, the business may not be a good fit, but they just want to buy the business so that they can feel good about it. And that is going to be a huge value destruction from a shareholder's perspective. So you don't really want that, right? You want a business that is able to, a management team that's able to think quite wisely on how to deploy every dollar of money, right? So that what's the thought process? I think that's really quite critical over here. So I just want to bring back Sanit Singh, CEO of Partech. But also I just want to put out a disclaimer over here. I currently don't own shares in Partech, right? I do not own shares in Partech. I'm not recommending any stocks. I'm not recommending you to buy or sell. Due diligence should be always done on the companies being shared over here. Okay. All right. So let's talk about Partech, right? The first year where he came in, he actually bought several companies which were absolutely good fit to the business, like a 3M drive-through business, right? So Partech is like a restaurant software operating system, right? And they bought the drive-through business. They bought a restaurant magic business, which is a back-end office business to do accounting, to do inventory management. So this was very synergistic with the business, right? And he also managed to raise a debt for the company because the company was in bad shape. He raised debt, and subsequently, when the company did better, he was able to reduce the interest rate on the debt. He also walked away from several acquisitions because of price. So he said, no matter how good a business is, if the business is being sold at a very high price, he said, no, that's not a deal I want to do. I want to buy a good company at a sensible price, not buying a good company at an expensive price, because at the end of the day, the value is in the price, right? And the assets. So both have to go well together. So really have a clear framework on what kind of businesses he wants to buy. And I think he does not believe in overpaying. Okay, that's one example here. Another company called Teledyte. So what was interesting about this guy here is this. When the share price was expensive, overvalued, he actually used the share price to acquire other companies, right? So instead of paying cash, he actually issued shares in the company, all right, to pay for the acquisitions. But when the company valuations was low, right, the share price was low, he actually uses the cash in the company to buy back shares in massive volume, right? So actually, that was quite a brilliant move in him. And as a result, he actually reduced the number of shares in the company by 70%, which means the remaining shareholders actually own a larger piece of the business over time. So that have actually created tremendous value. That has created tremendous value for the business, right? For the shareholders as well. Okay. So this is Partech. I think it did quite well after he came in. There are several companies that I want to mention. Heiko as well. They all have very strong criteria. They all have very strong idea about what kind of business they want to buy, what kind of business that they do not want to buy, right? This is another example. Okay, last few characteristics here, right? Customer centricness. Okay, so I think that when it comes to building a business here, especially right now, the way I look at how businesses thrive a lot is that they acknowledge customers' voices in product design and product development. They don't look at customers like, okay, I'm going to do a one-off transaction with you. I take your money and that's end of the story, right? But here they try to cultivate a lifelong customer relationship. So they kind of build a lifetime value of the customer, right? Not just a one-off transaction, but a lifetime transaction, right? Because you spend money to acquire a customer, then if the customer were to just do one transaction with you, is that good business? I would say that's terrible business. But if you spend time acquiring a customer and this customer spends money with you over time or spend more, that would be absolutely amazing approach that I would think is really good. And also, you know, they saw some problems as huge wrongs and they're driven by their customer satisfaction, right? And they have huge empathy for their customers as well. So I want to illustrate that by showing you an example tonight. This guy called George Crooks is a founder of CrowdStrike. So he was a McAfee, right? McAfee is an antivirus software company. He's the chief technology officer of the company. And one day he was traveling on American Airlines and he saw that a fellow passenger in the business class had to wait 15 minutes before the McAfee program was ready, right? The boot up time, and then you have the antivirus software starting up, wasting your time. Any one of you have actually encountered that before? Like you're on your computer and then you have this like back-end software that's running and then it's eating a lot of efficiency of your computer. If yes, just type a yes. So I just wonder if this is a common issue. Yeah, so George was looking at this and he said he felt embarrassed, right? He said, how can this be? Because this is not good for the customer, right? And that's our customer experience. And he couldn't change McAfee. He couldn't change McAfee because they are so old in their thinking that he came out and he created this company called CrowdStrike, which is a cloud-enabled software and it's very lightweight. It runs in the background and it doesn't interrupt the customers at all. It doesn't interrupt the customers at all. It runs at the background very smoothly, right? Today I'm actually using CrowdStrike as well. So you see, when a management team sees a problem in the world, you know, and they created a business because of that, you know, I feel that it's not just for corporate profits because it's also for a personal purpose, right? I feel that you got to have a purpose in the business that you build so that you can last long, right? So that you can dominate the business, dominate the market. Okay, Eric Yuan, I think is not a stranger to us, a founder of Zoom. Again, same story. He was the Cisco. I think he was the WebEx vice president of engineering, earning high 5 figures or 6 figures. I can't really remember. But he was not happy, you know, when he was going to work because customers were unhappy as well. And he tried to fix the issues, but they could not because the way the program is being coded is not flexible. It takes up a lot of running computation power, and he felt really sad, right? And he tried to change WebEx from within, but he couldn't, right? And again, he left the company. He said he started Zoom, right? And today we are using Zoom because of his invention. And he said that, you know, our culture of delivering happiness drives our mission, vision, values, and it's really fundamental in everything we do at Zoom. So again, do you know that Eric Yuan does something really crazy? He goes on Twitter to reply customer feedback, and that really shows that customer centricness that he has. And whenever the customer sends it a report, a query, you know, they do get responded quite quickly as well. And he seriously takes feedback as well because at the end of the day, I think as maybe entrepreneurs or product development managers, you may think that, oh, this is the best feature to your customers, but what really needs to change is that hearing from the customers, right? I feel that businesses or management teams that are more customer centric, they tend to outperform by a wide margin, right? Jane's son as well, trip.com. I think people love to use trip.com a lot because they are really very generous with the coverage, with the scope of cancellation provision. I do think that there are some maybe booking websites like booking.com or maybe TripAdvisor. When it comes to cancellation provision, they may be quite restrictive, but trip.com is actually quite customer centric, right? So customers do get a better assurance, and they are more assured that booking on trip.com, if anything happens, whether if there's pandemic, they will get a refund. And because of that, it may seem like you're losing money initially because you're giving all these cancellation provisions. They could cancel, but guess what, right? You build trust with your customers. Your customers instead choose to stick with you, right? If you ask them, okay, who would you choose, right? They will say, okay, the first thing they will choose is trip.com because they had a good experience. So it's all about user experience, right? I think it's so funny because as investors, we all want profits really quickly. We want rising profits, right? But we want to understand whether how sustainable those profits are. I think that's really a very important dimension when it comes to understanding businesses, right? So there's other traits that I would like to talk about today is a business leader should be a lifelong learner, should always think about win-win approach. That means the customers have to win as well. You cannot overcharge them. I think when you overcharge them, it's not a good feeling. And also there's this term called productive paranoia, right? Paranoia, right? That means you got to like look out there and see what other people are doing, but you don't just copy them, but you at least know the pulse of where your competitors are doing, things like that, right? And obviously, I think it's not just ensuring that your people, your customers are doing well, are great, getting great product, but you also want to ensure that you have a great culture so that you continue to retain good people, right? Great culture can be easily be found by searching on Glassdoor. I think Glassdoor would be definitely very interesting. You definitely can get a lot of information from Glassdoor as well. Okay, let's move on. So these are companies like Spotify, C Group, CrowdStrike, Zoom. I mean, not to just let you guys know that, like the share price increase, right? But, the share price doesn't increase just like that. It's not like magic, like one day the share price increased by 50, 60%. It doesn't mean, it's not like that, right? It's really about the people, it's about the strategy, it's about the team, right? And it's about the values, right? At the end of the day, you must understand that it's the people that creates the results. Results don't happen by itself, right? It's always the people. So by identifying the characteristics that we see in the management teams, it can really assure us, or more or less give us a framework and a direction to say, hey, what kind of people do I want to be managing the companies that I've invested in? And of course, maybe I give you guys a few more traits or characteristics as well. I think if you look at, I was looking at the chat, I think there's Nicola as well. So I do feel that the management team is spending too much time promoting the company. Usually that's a red flag as well. I generally don't like management teams that get highly paid. I believe JD.com is paid $1. I believe Forestly is also paid $1, but they often are paid in shares as well. What I really like is a management team that owns a lot of shares. I think that's a big plus as well. Focus on culture, focus on retaining quality talents as well. Let's move on. If there's a lot of CEOs, CFOs, auditors being changed, usually that's something that I would consider a red flag. I generally would just avoid it, or I would have a pause at it as well. Overcharging customers, I think that's absolutely a big no. And I think ability to think long term, I think that's really critical. And very often what I really, really enjoy a lot is, you have to be mission focused and purpose led, because at the end of the day, for most people that start businesses just to make money, I realize they fail really quickly. After they make the money, what's left? There's really nothing, there's no other goals to chase for. But when you're mission focused, you're about chasing, about ensuring your customers get the best experience, ensuring that your customers lives are being made better through your products. I think that is much, much better, and I think that will actually be the be the fuel, be the engine that drives the business to perform for many, many years, and not just in a 1 year, 2 year time frame, right? So that's really important. Okay, so I guess with that, we have come to the Q&A session. Yeah. Okay, I guess before I go to Q&A session, like if you guys want to like follow me on Instagram or Facebook, these are like my social media links. That'll be, yeah. So this is in Hong Kong. I love to take this boat called Aqua Lunar. So if you are in Hong Kong, do check this out. Yeah. So let's go to the Q&A session.
Awesome. Thank you for that wonderful presentation. Anyone have any questions? You can either say it or type it out in the chat.
Hey, Kelvin, this is Young. How do you arrange to meet with some management group?
Oh, I do feel that a lot of times we might feel like, who are we to actually speak to the management teams, right? Because we might be a small shareholder. But I often think that as investors, we may have a lot of self-limiting beliefs in ourselves. And I also feel that it's actually the way we approach management teams. I think that's really important. For me, I don't email them and say, I have this question 1, 2, 3. Can you answer me? I mean, they get tons of emails like that. Like, how do you differentiate yourselves? So what I do is that I give an intro about myself. Like, I'm Kelvin. What kind of business do I look for? How have I been investing for the past few years? I noticed about your story. I noticed that you moved from New York to New Hartford. I noticed that you did this. You kind of gave like an impression that you actually you have done your work, right? And then you ask intelligent questions. You don't ask questions that can be found in like their press release. You don't ask questions that can be found in the earnings transcript. Like, they will just like delete you off, right? They will not reply. So this is a waste of my time. But you can ask questions like deeper questions like, what's the thinking behind buying this acquisition? Things that are interesting. And with that, right, you kind of like build a relationship, because a lot of times we think that, management team is here, we are here, right? But I try to like equalize the relationship. And every single time they report a great earnings call or a great earnings, I'll just send them an email like, hey, Josh, amazing results, terrific results. I know that this is made possible because of your execution, because of your team. I'm really proud of you guys. I think that you guys will definitely like do well. And I think I'm really happy for the product release. They may not reply to your email, but they know that you're a genuine shareholder. You're not like trying to exploit them, not to meet them and waste their time. Because management time is precious. They want to know that you're the real deal, right? And if you're serious about it, you're sincere about it, I think human relationship is that, as long as you're human, you're sincere, you're not trying to exploit their time. When you ask them for a meeting or a call, or they are quite nice. Generally, I feel that American CEOs are nicer than Asians one. Asians one, I think they don't like to meet us. I don't know why. But Americans one, they are nice. Sometimes they will say, okay, let's not meet at the office. Let's go to the like Four Seasons hotel. Let's meet. Then you have a breakfast together. So that's how I do it. But I do not know if there's any other ways. But so far, this has been working quite okay for me. Okay, any other questions? Oh, it's unmuted.
Yeah. Hey, Seetoh, thanks for and thanks for the talk. I totally agree with all you say. Are you like your investment, 50,000, 100,000, where I'm coming from is I think we have a whole spectrum of investors here. Now, I personally will not waste my time going to meet somebody. Seriously, the way I've done it, what do I have? $50,000 in a share. So, and because there's so much news that's out already, some of them are pretty obvious, but they all kind of agree with what you're saying. Basically, we're looking for new products and great management team, track record, and and what's the ecosystem and all that. So short of meeting the management team, which I think is very non-feasible in many situations. America is really big. So I'm just questioning, like, how often do you do this? I mean, what kind of numbers are we talking about? You don't have to give out proprietary information, but it just seems not very feasible if you want to meet, unless you want to. So under what circumstances are you going to invest for like 10 years, 50 years? A lot of us are doing momentum investing, and it's like, I'm not going to spend 3 hours talking to the management team when I'm going to get out in 2 months' time, So it's all the same principles. I totally agree, and I support you. Thank you for doing that. I'm just thinking if you can talk whether it's worthwhile also.
Yeah. I think your question is very valid, and I think that would be a question that is on many people's mind. I mean, if you're like a short-term trader, then I would say, or short-term investor, I would say this is definitely not a feasible thing. A better thing would be going on running, trading your mind to be sharp to trade the markets. I think that would be absolutely higher return on your time and your energy as well. I think I always wanted to visit America. Coming from Asia, was quite poor back then, didn't have the money. And I always felt like life is short. My trip is like 2 weeks long, but I feel like I want to pack everything in, like meeting management teams. So I wanted to really and those companies are companies that have been invested for a long time, and I intend to invest and hold for a long time as well. And that's the reason why I decided to spend the efforts as well. But I do think that in today's era, in the I wouldn't say post COVID-19, but within COVID-19, management teams are more open to doing Zoom calls as well, because they feel like they don't have to, they just stay at home and then just Zoom call. I think that'll be very efficient of your time. But generally, I would just avoid spending time talking to management if you are short term, because more time can be spent on analyzing companies. But I feel that the upside here for speaking to management is very important, because sometimes when you read the transcripts, right, you read the interviews about what they say. They're being interviewed by CNBC about their purpose, about the story, about Eric Yuan is being interviewed quite often about his vision, about for the future as well. I mean that's really great, but I think what's really missing is the tonality of it. The energy that you can feel when they're talking to you. There are certain things that cannot be replicated through words, right? So I feel that if you're like super long term and you are really focused on this unique opportunity, let's say you talk about you talk about Square, you think that these are incredible companies. I feel that it's quite worthwhile to meet them, because you feel their passion right across the room. You can tell whether this guy is authentic, whether it's a fraud, whether it's fake, or sometimes you throw them a question that caught them off guard. You see how they react. Do they break out in a cold sweat? Because when I do earnings transcript, when no one's going to see me at all, I can lie all the way I want. But when I'm on Zoom with you guys, right, when I'm telling something that's untrue, you can see I'm perhaps nervous or whatever, right? Or like I'm like trying to like if my throat is dry, I'll be like trying to do something about it, drink water, or my eyes movements here and there. So I think for serious like investors, that will be something that will be extremely beneficial when they meet management teams.
Hey, Kelvin, thanks for giving this presentation. It's Kevin from Minneapolis. I'm just curious how much research goes into, prior to, I guess, meeting with management team, like what sort of resources are you using? Are you like subscribed to like Bloomberg? Are you looking through like Seeking Alpha? Like what goes into that before you reach out?
Oh yeah, sure. Okay, I want to share my screen for a while. Okay, give me a while. Yeah, I think should be okay. Yeah, I just want to show a few things here. So what I really like is this resource. It's called like I don't really know how to pronounce, but it's free. What I do is that I'll go to the oh dear, give me a while. Okay, maybe I'll type Square, right? Square. I'll just look at the earnings transcript. and read about certain things that are interesting. The way I like to read about it is that I'll just copy the whole presentation and I paste it on a Word document and I'll highlight things that are really important to me and things that I have questions about, right? And maybe sometimes I would just go on interviews.
Oh, we're still looking at your PowerPoint. I don't know if you're showing something else.
Oh, okay, sorry. Let me see what can I do about it. Oh yeah, sorry. Okay, this is good. Yeah. So what I do is that there's this website that's pretty good. It's free. I don't subscribe to any Bloomberg or Capital IQ. I don't believe in paying for expensive softwares. So this is a free website. I just put in the ticker code Square. Just go earnings transcript. And I look at some transcripts and I just like, like I do it when I'm like free. So like after work, before work, just copy the whole thing and I paste it on a Word document and I highlight things that are important, like things that are in my mind, right? Things that I felt that things that are not asked before. And sometimes what I've learned as well, because in the earnings call, there'll be other analysts that'll be asking questions as well. And like there are some questions that are quite general. And when there are good questions being asked, I like to copy the question and I'll build a list of great questions to ask management teams, like those that catch you off guard, right? You don't ask about, what's your profits going to grow by next year, that kind of thing, but you ask deeper and more meaningful questions, more thoughtful questions, like, what's your strategy behind buying this acquisition? Do you feel like this could fit into the business in this portion, ABCD, right? So those are very thoughtful questions. And on top of that, what I do is I go to YouTube. I'll search the name, the founder name, the company, and I just watch. Sometimes I could be like doing like push-ups at home. I just play in the background, and sometimes I hear certain things. I'm like, okay, I'll stop my workout and I just gonna listen, and I gotta like note it down. So these are, I think, generally the research that I do. But sometimes there's things like let's see, Jack Dorsey. Like can go to news and then there are some interviews like, why does Jack Dorsey that Bitcoin? Maybe that could be one of the question as well, right? So but I don't like spend like 2 hours like in one go, like this like bit by bit kind of thing, because I feel that if it's very intense if I do it at one go, because sometimes when I have the information I like to digest on it, sit on it, and maybe I'll just do a bit more research to formulate over time. Yeah, that's how I do it.
I like that strategy. It's very efficient. You get a workout and you get to learn about the companies at the same time.
Oh yeah. We'll ask the question on chat box. How do you typically obtain information on companies in US, China, or other countries? Yeah, so they have an investor relations website. I don't listen to CNBC, Jim Cameron. I think like Sam say, yeah, 50-50 track record. Yeah. Yeah. Are there any questions?
Oh, I have a question.
Okay.
How do you find these companies before like they're like all well known and they turn to like big companies? Like how do you like find I guess the early up and coming companies
Oh my God.
become these gurus like Zoom and Apple and Google and all that?
Okay, that's gonna force me to review my secrets. That's like the best question so far. Okay, Anthony, so to answer your question, okay, I think there's a few ways, right? One is that I'm not sure if you guys is aware about this company called like Uniqlo. Is in Singapore, is very quite popular. So okay, what I do is like Peter Lynch ever said this, right? Just look around you. What are people consuming? What are people buying more? I think Skechers in Singapore is growing really well. In China is growing well as well. Like when I look at US, when I asked my friend about it, they said, okay, the Cash app is really good, right? I just want to check, like, any one of you using Cash app right now? Just type a yes. And also what I do is that I look at maybe the app rankings as well, because today all of us communicate through apps as well. So if I see Zoom's app rankings start rising very, very quickly, I have this website called the App Annie, which it tracks the rising apps popularity. So I would just check whether they are listed as well, like gaming companies. If like there's a company called Gravity, they do the Ragnarok gaming, and they started the rankings, the game downloads started to rise very, very quickly, because when the rankings rise, right, it's actually almost real time, or maybe a lag of two or 3 days, right? But when it comes to earnings results, it's only when the 3 quarters ended and then 1 month later they prepare the results, then they release it. So there's a lag in financial results. But what I want to see is that, do I have alternative data points which can point to me a direction that the business is going to do well, like Zoom, like Ragnarok, like Shopee. There's this thing called Google Trends. You can see whether it's going to do well, whether it outpaces the competitors called Lazada. So that's one thing. But second thing is maybe on the financial perspective as well. Ultimately, how do you know whether a company is a product is being validated, right? How do you know whether a company is doing well? First thing is I look at sales. I always go for a minimum of at least 20% growth rate in the companies I invest in, because if they can't even hit 20% growth rate, it means that they are not gaining mass market adoption. It means that the business is not well received, not well resonated with the consumers. So I look at very, very high revenue growth, but I also want to check whether it's sustainable, because if it's a high revenue growth off one-time product like a property development, things like that, I would just generally avoid it altogether. But so I guess to answer that question is just looking around you using alternative data points like app rankings, Google Trends, and just seeing what people around you are consuming, I guess. But I don't really have a method. It's just like try like piece puzzles together. Like, I think investing is just like piecing puzzles. Yeah, I wanted to invest in Shake Shack last time because I love the burgers there. It's different in Singapore. I think in US it tastes nicer. The beef is like there, right? Not imported. So but I did not buy Shake Shack at the end of the day. Yeah.
I wish In-N-Out had shares and wasn't private.
Oh, In-N-Out.
Yeah.
Oh man, nice. Okay, I think we have time to take like one more question. Then I'll just pass back to Sam. It's your opportunity, guys. Let's go.
That's the final question of the night.
Oh, that's the question.
Oh my god, I'm scared right now.
I just want to I guess it's like overall, like just kind of like your thoughts on like the market. Just want to your general sense, and maybe some people could interact with it and kind of add on top of it. Just kind of how things are going today, or in general.
Yeah. So I'm not gonna like give you guys like super sophisticated answers. Like honestly, I'm not like super micro. Like I do know that Donald Trump kind of ended the stimulus talks with the Democrats yesterday, but I feel that a lot of investors, we tend to I think I would kind of like reframe that question to think about what would truly matter in decades to come, right? In years to come. So while I think it's really nice to focus on interest rates, and I think a lot of other factors, which I think obviously they are important, but I think the greater question that I want to ask myself is that how certain am I that the company I'm investing today will have more customers in the future, will release newer products? How confident am I that the management team is going to be able to execute? Because we have to understand one thing, like the market's movements, the interest rates, these are things that absolutely we have no control over. But unfortunately, I think a lot of us spend a disproportionate amount of time looking at the markets, looking at a lot of economic indicators, which I hope I'm not offending people, but I think it's pretty useless because it changes every single time. By the time you have finished analyzing that, it changes again, and you're just like back to square one. But what I found to be really interesting to yield a better returns for me over time is developing a deep understanding for the businesses that I invest in, because people, they don't change over time, and strategy, they don't change it over time. These are more long lasting, more long shelf life research that I'm doing today. So I think to that, I don't have an answer to where the market is going, but I do have an answer to where I feel that my business's portfolio is going to do in the next few years to come. I can't say what's in the short term, like months basis, but year basis, I think that's more likely to be more accurate.
I have a question.
Yep.
What are the top 5 stocks you have in your portfolio right now? Are they the one that was in your presentations earlier?
Well, okay. This may shock everyone, but Anthony, I think Kiona is like now the ranked best question now, top question right now. Okay, so I own 2 Singapore companies. One is called iFAST, the one that I showed you guys, Mr. Lim, that was like China business that's loss making. I met him. I like him. I think he's a very smart guy, the way he grows his business. And even though there's a lot of pressure from shareholders, but he still believes in doing the right thing. I like people like that, right? It's like underdog kind of thing. So iFAST is one of it. Another company is similar to New Skin, like Herbalife, that kind. So maybe some of you have some perception of MLM, but this business is a bit different. It's called Bestware International. It's in Singapore. It's currently halted for trading for a little bit because there are some misunderstanding and interpretations by the regulators, but I think that should be solved fairly quickly in the next 1 or 2 months. I'm not too concerned about that. My biggest position right now is in C Group, owns Shopee and owns Garena. I think if I can share with you guys a few things. Just give me a while. I just want to pull out something very important to show you guys. Yeah, I think I got it here. Okay, I'm going to share my screen for a while. Yeah, good. Yeah. So if I look at C Group right now, right, the Shopee sales that they have is about like 834 million, and the population size is 670 million, right? And you look at Amazon, which is in US. The population size, and you look at the sales that they have generated. You look at Alibaba, the population size, you look at the sales it has generated. I feel that Shopee and Southeast Asia still hasn't caught up really in terms of e-commerce. I think there's a lot of growth that we can expect Shopee to deliver. So C Group is definitely one of it. I'm also currently evaluating, okay, so right now I own iFAST, Bestware, and C Group. But it's just that how I concentrate my portfolio, and I hope that I'm not scaring some of you guys off. Okay, yeah, I also have one more company called CrowdStrike. So I have 4 companies, right? 4 companies over here. But I think generally when I started investing, I had like 8 or 9, and then finally I kind of like, because I believe my 8th idea may not be as best as my 2nd idea. And I feel that because I'm a full-time investor, I can afford to do deep research so that I kind of lower down my risk by knowing what I'm actually investing in, which is the reason why I hold 4 stocks. But I think that for people who are full-time investors, people who are actually working as well, if you hold 8 or 9 stocks, it isn't that bad, right? But again, to summarize, iFAST, Bestware, C Group, and CrowdStrike, 4 companies. Yeah. I think that's all. Yeah. Maybe I'll pass it to Sam. Yeah.
Sure. Thank you for sharing all that with us. My goodness, you even shared your entire portfolio. That's very generous. So yeah, with that, I want to thank Kelvin, and everyone give Kelvin a great round of applause for spending so much time with us and sharing all of his knowledge. So woo! All right. So thanks again. If you haven't joined Asian Investors Network, I will drop the group link below in the chat, and look forward to seeing you guys all in the group. Thank you everyone for joining us tonight, and thank you Kelvin once again.